Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's have a look in the gold market once again. So today we have prepared a report as usual. There's a lot of interesting stuff. So we have made an analysis of the possible Donald Trump initiatives, and you probably heard a lot about this already from the media, that it will be a tax cut inside of the United States. This will be a new tariff imposed on import from the China, European Union, and other current countries. But there are just a few analysts who really consider how it might be realized, so how practically Donald Trump could achieve this, and what really could happen inside of the United States economy. We have tried to provide you with one opinion that actually shows the practical way how it might happen, what particular steps Donald Trump could take. Second is of course the budget deficit. This is really big headache for Donald Trump right now, together with the inflation that we have considered recently. So it's not really actually decreasing. Supposedly it will be really stubborn around 4.5% on average in a long-term period. And together with some confrontation with the Federal Reserve and Jerome Powell in particular, it's really becoming some really intriguing and tricky situation inside of the United States, inside of the domestic political and economical arena. So this might be really very intriguing to keep an eye on what will happen. By observing the market opinion, it's becoming clear that investors in general expecting the longer and deeper retracement on the gold. And this is, well, in general, this is reasonable by the few moments. First is, on the first stage, the speculants have to go out. So actually all those who have bought gold for the insurance for a possible social unrest and results of the elections now are going out. Second, it will come to restructuring the long-term investment portfolios when the share of the gold probably will be decreased in the nearest time. On the next moment, we have to wait for the first fruits of the Donald Trump policy announcement. So once the first steps will be announced and first tariffs will be imposed, if they will be slightly greater than initially market thought, it also could support the dollar. And only when we will get the first inflationary fruits of these tariffs, the gold could change the direction. So it could last, well, for a few months, definitely, maybe even to the half of the year. All this period probably will lead for gold to stay in some downside action. Maybe it will not be as strong, but we should not expect really fast upside reversal from this point of view. So this will be a great time for those of you who are accumulating the gold and investing in the gold. So you could watch for weekly and daily dips and to grab the gold on really attractive levels. But when all this stuff will be over and first inflationary fruit starts appearing in the United States economy, they will appear anyway because of the budget problems, because of the debt problems, and there are really lots of tricky moments exist with the Donald Trump plan. Actually, it is so nuanced as similar to go on actual razors thin. So it's lots of pitfalls, and actually many things could go wrong with it. So when all the stuff together, we suggest that after that, maybe this moment will be even accompanied with the crash of the stock market. It's not necessary, but this was one of the options. This big rally and a major upside trend on the gold will start. We suggest that this will be closer, or better to say, in the second half of the 2025. Until this moment, we should not expect the same action as we saw in last year. So we will get from time to time maybe some moderate upside trends, dynamic, but mostly it will be some as we suggest, wide range on the gold market without a really big collapse. So that's what we could say on the longer term tendency. Now, if you take a look at the technical picture, first of all, speaking about the very short term on the next week, nothing has changed. So you can see that on the Friday it was inside session. As we already discussed, this brand body setup here, and the market stands on the target here. So actually, we talked about this on Friday as well, and Thursday. Now, strategy hasn't changed. So on the hourly chart, we still see nothing. It's difficult to call as a preparation for the bullish action, because performance here stands really slow, choppy, and doesn't correspond to the idea of the sharp reversal. So usually gold turns to the upside action much faster. It means that two things. First is either no reaction will be at all, which is not very probable, at least from the technical point of view. Second, the reversal and reaction on the support will take more time, when the gold will try to test the lows for a few times, challenging the oversold, challenging the support area, and only after some multiple attempts and touching of this area, it could start forming something else. So other words speaking, here is the pattern that will trigger the upper bounce might be a bit more extended. It will be not as small as, for example, this triangle or something. This might be a really wider hand and shoulders pattern, for example, or something. And that's in towards what we have here. So here's our strategy stands the same. We're just watching for a pattern, because currently the overall context is not sufficient for taking a long position. For a short entry, it's also not a good idea, because market stands that they were sold at both time frames, on the daily and on the weekly. And just a few words on the monthly chart. So once we were talking about the brand body on the weekly chart, let's take a look at the monthly chart. We could get very soon the same. If gold with perspective of a few months will reach 24 area, and this is very probable. Just those of you who read our euro reports, you could recall what we talked about long-term perspective on the euro currency and the dollar, and I will be absolutely not surprised if we will see 24 area. Besides, all in all, this is just even just a 30% retracement of the most recent swing. So this is nothing for a long-term tendency. It's normal pullback. Even 618 retracement is normal, because it stands only after the most recent swing. It's not of the global upper swing that was lasting for the recent 5 years. It's just for 1 year pullback. So it's absolutely reasonable, natural, I would say. And the brand body that we have on the weekly with some pullback, it might become the part of the larger ABCD pattern to the 2415, 2480 confluence area, where actually monthly brand body could start. So as you could see, a lot of interesting stuff in the gold market in the long-term perspective, and it will be really very interesting to pass through all of these trading setups. Meantime, on the coming week, we'll keep watching on intraday charts and see how market will respond, if it will respond at all, on the current support area.